If I were to tell you that one of the largest companies in the world had their valuation cut in half, you probably would believe the company was undervalued. Amazon has done just that and is now valued under $1 trillion. But what if I told you that there's a possibility the company still isn't undervalued? Well, in this video, I want to give my honest analysis for Amazon and then share my thoughts about why I won't be buying them despite the discounted valuation. But I don't want to waste your time, so let's go ahead and dive right in. So when we think about Amazon, they are currently valued under $100 a share. And even though that is significantly lower than before, what makes this a good valuation for Amazon? Just because the company has been down almost 50%, I'm struggling to see this as a great risk-reward play. Now, one of the most common arguments for people is that over the past few years, Amazon has had a much higher PE, or price to earnings ratio, which is where you take the share price and divide it by the earnings per share, or EPS. And over the past few years, the company has traded somewhere between a 50 and a 70 PE. But currently, Amazon is trading about an 85 trailing PE with a forward PE of around just above 45. Now, of course, we need to consider that this year's earnings is going to be a tough one because of wage inflation. So the EPS, or earnings per share, for the following year will be much lower. However, when we look at the kind of growth that they've had over the past few years, it has been significantly higher than what they are expecting over the next couple of years. For these upcoming 2 years, they are expecting to have 8.6% in 2022 and 10.6% in 2023. So given the kind of growth that they are expecting, I think a fair PE for the company is about a 40. And this was something that I said back in July when the company was trading over $110 a share. But if we look at the current valuations for several companies, how many of them are either fairly valued or undervalued? And this goes back to what I was saying earlier about if the company was truly a great risk-reward play. Amazon is a great company, but I don't believe that it should be a buy at current prices. Especially with several companies trading around 52-week lows, I don't see a reason for buying a company that has a high PE with only 10% growth. Sure, it's down from where it once was, but that still doesn't justify its current valuation. Another thing to consider is where the sales are really going to come from over the next couple of years. With consumer spending already showing signs of slowing and there being a high likelihood this continues for the next year or so, how is Amazon going to grow for 2023? Now, I'm not going to go as far to say that Amazon isn't going to grow at all in 2023, but to expect similar growth and earnings as before is hard to believe in my opinion. I mean, if we look at the upcoming quarter, they are already showing signs of struggle. They're expecting to only grow between 2 to 8% year over year. So this uncertain time is already demonstrating to have a significant impact on the company. But I think the even worse part is how their operating income has been impacted. They lost $2.4 billion in operating income over the past year, and they're projected to have between $0 to $4 billion in operating income this quarter. This is a very broad range, and when you look at the midpoint, it is immensely lower than the $3.5 billion they had in Q3. If we're honest, the only reason that Amazon has not fallen further is because of AWS, which has held up their operating income. Their main part of their business is selling products on their website, and I honestly don't see how there will be strong growth in this segment both in North America and internationally. With the possibility of unemployment rising and Amazon expecting to reduce their workforce, it's hard to see accelerated growth, at least for the next year or so. In Europe, the consumers are in an even worse economic position because of inflation and all the political pressures that still exist. Even though we technically saw a decline in sales, most of this came because of the change in foreign exchange rates. However, I can see a scenario where we see negative growth in this segment for the upcoming quarters. Lastly, let's talk about Amazon Web Services. Now, this is easily their most exciting segment for growth, but the question comes down to what kind of growth will they be able to generate in this kind of environment? With businesses not having as much money as before, there is going to be less advertising, which could lead to less sales. So they will need to rely on their analytic and cloud services to carry this segment. Now, maybe after the recession, we could see incredible growth from this mega cap, but how long will it last? If the Fed funds rate remains high, unemployment moves upward, and there continues to be a reduction in spending, then we could see little growth for Amazon for the next couple of years. The way that I see this is that if you believe the recession will be short and we will go back to the growth we saw in 2019, then Amazon could deserve a higher PE than a 40. But what if this recession goes through 2023? How will Amazon's business look after this? I think these are all things to consider for Amazon. Now, I understand that I could be completely wrong about this, and that the recession only lasts for a few more quarters. But given the facts that we are still in high inflation, the Fed wants to keep rates high until inflation falls, and we are now at extremely low savings rates, it's hard for me to see Amazon thriving in this environment. And I wouldn't doubt seeing them fall even more. But even if they don't fall anymore, would you be able to say that this is one of the best companies to buy in terms of valuation? I would say that their business model is outstanding and probably one of the best in the world, but the valuation is still high in comparison to other businesses. I believe that there are still other great large cap companies with lower valuations with solid upside if you're looking to diversify with bigger companies. And so I've been really strict when it comes to pricing because there are many companies at low prices. And with small caps normally being the first to see massive price drops in share price, I went after those in the end of 2021 going into 2022. Now we have seen the large caps get hit significantly and I have some cash remaining to buy them. And so rather than many people buying these large cap companies at all-time highs, I can remain firm with buying companies at my own price targets. And honestly, that's why I don't see Amazon as a buy right now. If it falls to under $70, then I will consider it, but I don't feel obligated to buy it because it's at multi-year lows. Now, I will say that their Amazon Web Services have performed really well as they are continuing to make updates and expansions that will help them in the long term. But as of now, their primary business is what's holding them back. Now, once this economic downturn ceases, I think these kinds of moves could help the company when it comes to the share price, but I still think that this next year or so is going to be difficult for Amazon. And I can only see the company justifying a 54 PE if they continue to have at least 15% growth for the next 5 years. Maybe they will find ways to utilize their Amazon Web Services to get to that mark, but when I look at several other large cap companies, they are significantly more undervalued than this mega cap. I still believe that Amazon will continue to be a great company, but the valuation, in my opinion, is simply not at a point that I'm willing to buy. Now, we've seen several people buying Amazon at these prices, and here's why I believe this happened. I think several investors never expected Amazon to be at these prices, so they did not hesitate to buy the company. And yes, the company is currently at multi-year lows, but when we consider the growth, in my mind, the price puts them at fairly valued, but not undervalued. Is Amazon one of the top stocks to buy at current prices, or is it because they are a great company that people wanted to buy, and this could be the only chance that they get? It seems like many people chose to buy Amazon out of FOMO and not because it was a great share price. And given the current valuation, I see better opportunities elsewhere. And that's how I'm feeling about Amazon. I could be completely wrong, and I hope that I am because I do want to see people make money. But with all that said, I would love to hear your thoughts about Amazon's current share price. Hope you all enjoyed this video, and I'll see you in the next one.